Hello again, and welcome to another episode of the Uranium Market Minute. My name is Justin Hune. I am your host, the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you so much for watching. Before we get into it, a reminder, nothing in this video is intended to be investing advice. I am not a financial advisor, and this is not financial advice. Always do your own due diligence when investing, and always take responsibility for your own actions. Thank you. Let's jump right into the daily scoreboard. I'm going to tell you about the spot price of uranium and the flows into the Sprott Physical Uranium Trust and the ETFs. Starting off, the spot price of uranium falling again today, down to $39.75 a pound. Mid-market broke down below that $40 a pound level. A lot of people, myself included, did not expect to see this. Again, this is happening on relatively low volume. And the equities are kind of ignoring the spot market. It's really interesting. Traditionally, the equities follow the spot market pretty closely most of the time, with an exception of the rally that began in December of 2020. But we're seeing the equities, they sold off a few percent today, but for the most part, holding up relatively well, considering the steep slide in the spot price from $52 a pound a few weeks ago, all the way to $39.75 here. We're seeing Sprott Physical Uranium Trust back in the market. Yesterday, they acquired 100,000 pounds of uranium. They raised another 5.1 million through issuing new shares or new trust units. And as of the close yesterday, had 14.7 million in cash. I do believe they traded at a premium to NAV for at least part of the day today. So it's highly likely that they were issuing more shares today, raising more cash, probably buying more uranium. We'll have to see. This is really what this vehicle was intended to do. Raise cash whenever they're at a premium and continue to scoop up pounds of uranium. Now, the move from August 17th, when their ATM went live for about 4 weeks, was incredible volumes, far beyond what anyone expected or anyone could have ever predicted or dreamt for. And the level that they're doing now, 100,000 pounds here, 200,000 pounds there, 400,000 pounds. If they do 500,000 pounds a week, that consumes all of the uranium coming into the spot market from primary production and even from some secondary production, probably 1.5 million pounds from primary production. So the secondary supply adds to that a little bit, but if they keep up this level of buying that they're doing right now, they will clear out all spot uranium that comes in from production, from primary production. What's left there, whatever standing inventory is left, which we believe is not a whole lot at this point. Yesterday, they closed at a 4.2% premium to NAV. And I believe, like I said, that most of the day today, they remained at a premium to NAV. The stock sold off pretty bad at some point today. We'll go to the charts in a minute, but it looks like some dip buyers are there. So that's good to see. And since the 17th of August, when their ATM went live, they've raised almost $500 million, 489 million of new capital, and acquired 11.4 million pounds of uranium. Just an absolutely huge new secondary demand. Turning to the ETFs, both URA and URNM reported increases in outstanding shares yesterday or this morning. Again, there's a lag time with this reporting, right? Anywhere from 1 to 3 days. So the actual buying and selling that the ETFs are doing based on the share issuance or share redemptions is happening not necessarily in real time, but let's say within 24 hours, and a lot of times even in the same day. But the reporting lags a couple of days. So the best we can do is report on that based on the information they put out there. So URA reported an increase of 150,000 shares, and URNM a nice healthy 400,000 new shares. That means between the two of them, we have $33.2 million in new mandated buying of their underlying holdings based on that issuance. And we likely saw that yesterday and earlier in the week. So the AUMs of the two trusts since the end of September have grown just over $100 million in the first 6 days of October. Pretty incredible. So that's pretty substantial. And now the AUMs of the two combined is just over 1.5 billion. These vehicles are growing, especially URNM. It's likely if we apply the 70% uranium allocation to URA, URNM is likely going to lap them here. Let's take a look at the charts. So we had some nice moves in the sector the beginning of the week, and yesterday was kind of a firming up of a number of stocks in the space. But we're seeing a bit of selling off today. URA sold off pretty sharply, gapped down pretty substantially, sold off during the day, and then some dip buyers showed up. That's good to see. Pretty darn strong volume in URA as well. Indicators looking like they were wanting to turn, but now it's looking like they're ready to head a little bit lower. Perhaps we'll have to see. I don't know if we'll get there, but if the sector does make a move with not only the ETFs, but some of the stocks in the space, kind of eyeing that rising 50-day, that, in my opinion, if we reverse course a little bit here, since the big moves in December of 2020, that reset to the 50-day, boom, boom, almost there, boom, and then here to the 20-day. These are strong points of adding to these stocks and to your holdings. So when you have the 200-day and the 50-day rising, that's clearly still in a bull market, and corrections down to that 50-day are going to happen. And when they do, if you are not fully positioned, and you're still adding in tranches, as we always suggest to our members, that 50-day rising moving average is a typical good place to add, or when it approaches that. So let's take a look at URNM. Very similar chart, and some dip buying happening there. Volume ticking up a bit from yesterday. Nothing too exciting happening here. Again, gapping down on the open, but seeing some dip buyers come in. The market's just closed as I'm recording this, so we closed out at maybe 1 or 2% down for the day. Nothing to panic about. Let's take a look at the Sprott Physical Uranium Trust. Increasing volume again here. Indicators are looking like lower is in store still, although look at this perfect tick off of the 50-day. However, I don't really like to trade the charts for a vehicle that's following the spot price of uranium, because the spot price of uranium is not really trading on technical charts either. This has to do with traders trading pounds back and forth. I think that a lot of what we're seeing in the market right now in terms of the spot price is Sprott doing those daily purchases and lowering their bids. And there's some willing sellers out there that are probably have it in their best interest to see the price lower. So that's all I'm going to say about that for the moment. But hopefully we see this 50-day hold for the Sprott Physical Uranium Trust. Let's take a look at a couple of the large caps here. Cameco green, closing green on the day. Pretty good. Nice hammer there. Still a ways to go down to the 50-day. Indicators looking a little bit stronger for this one, so that's a good sign. Next Gen, I think, had somewhat of a bloody day. But we did see some dip buyers come in right at that 50-day, as I mentioned. 50-day, 200-day still strongly moving up, not even starting to level out. Really good sign. Let's go into the mailbag here and see if there's a question for us. Justin, do you have any tips for dealing with volatility? Oh, that's a good question, and probably an appropriate one for today, since we saw some selling come into the space. And it always kind of makes me not chuckle, but it's always kind of funny to me that people panic when their stocks are down 2, 3, 4% on a day, but they don't really have an equal and opposite reaction when they're up far more than that in the day. You can see 8, 10%, 15%, sometimes 20% moves in these stocks up in a single day. And when they correct 2, 3, 4%, you can just sense kind of the feeling of panic. I mean, nobody likes to lose money, even if it's on paper, even though nobody can trade these things absolutely perfectly. And I don't know why you would want to anyways. Not only are you dealing with short-term capital gains, or if you're taking something and trying to trade something in and out that you positioned more than a year ago, you're turning a long-term capital gain into a short-term capital gain by attempting to reposition. So, the volatility really is something that needs to be stomached, and that can only come with two things: experience and having it happen over and over and over to the point where you're numb to these movements, and almost numb to the upside as well. I can't say that I'm completely numb to the upside or the downside. I definitely notice just in my emotional body on red days versus green days, there's a significant difference. Obviously, the green days are more enjoyable, unless you are still adding heavily to positions, and these red days are a gift, right? And the second thing that can help with this is conviction. You can't fake conviction. This is not an investment where a buddy told you about it and you just go for it. It's something that you have to believe in, and you have to understand the fundamentals deep enough to be able to weather days like today. And today really wasn't all that bad. I think I had a total portfolio for my uranium portfolio down about 3%. not really all that terrible. When I've had 7, 8, 9, 10% up days for the entire portfolio, it's just absolutely insane. These are returns that most, experienced long time investors would be happy to have in a year. 10, 15, 20% years are phenomenal, especially if you can do that year over year and you're managing a lot of money. To have those kind of moves in a day or a week is insane. And you can't have that without the downside volatility. So no matter how great this looks, you have to expect that you will have corrections down to that 50-day. We'll probably have a couple to the 200-day during the bull market. That is going to happen, and you have to expect that. And what you have to really do is, for a fundamental investment that you are invested in for fundamental reasons, so you're not trading on the technicals without really a lot of knowledge or even interest in the fundamentals for the sector or the stock. If you're invested into something for fundamental reasons, then what you really want to do is basically opposite of what your emotional reaction is telling you to do. On days and weeks and months when there's euphoria and everybody's high-fiving each other in the hallways and doing cartwheels, those are the times when you probably want to be peeling off some profits and just putting that in your pocket, not necessarily even trying to trade in and out, even early in the bull market. If you're taking profits, maybe just put that in your pocket, look for another opportunity, or just hold some cash, right? And days, weeks, months when it's the opposite, when everybody is destitute, and we're not there. The sentiment is not that low right now. It's pretty low, but it's not that low. But July was much lower, in my opinion, in terms of sentiment. July, and right before Sprott's ATM went live on August 17th, the times when sentiment is really low and the stocks are selling off, if nothing has changed in that fundamental case, those are the times to be buying. And when things are euphoric, those are the times to be selling. So tips to hang on in the volatility: educate yourself as much as possible. This is why in our newsletter, we focus so much on the fundamentals and the macro part of the story. We spend an inordinate amount of time on covering the macros because we want our readers, our subscribers, to understand what we understand about the sector. There's all of these pieces of this puzzle that are buoyant, that are supporting the whole story. So this is not a flash in the pan type trade. This is a long-term trade. At least the fundamentals are long-term. How Sprott and the institutional players purchasing physical uranium are going to speed that up is still unknown. I believe they will speed it up. So there will be a time to get out, probably before the long-term bullishness of the fundamental setup here really plays out. But just learn as much as you can. And that's why we focus on it so much in the newsletter, and why a podcast like this is even relevant. Putting content out every single day, just talking about some of the fundamental factors in this market is, I'm trying to help you all just understand the bullish setup here. And the setup here is unbelievably bullish. So anytime I see pullbacks like this, I get a little bit greedy because I'm not anywhere near ready to be selling here. And so I see a pullback to the 50-day of something that I have my eye on, a stock that's on our focus list that we own and recommend, or we're still positioning now. In fact, we put out a new position last week, and we're likely going to be adding to that if it pulls back a little bit more. So get greedy when there's blood in the streets. That's the time when you should be buying. And question euphoria when things are really, really going. We're getting 2.5, 3x the 200-day technically on some of the stocks, and everybody's euphoric. That might be time to peel a little bit off. So hopefully that helps. And I'll talk to you guys next time. Cheers.